Yeah, so what's up? Today we're going to be talking about this bearish market that is going on. Um, some of you are panicking. I get it, but we're going to talk about that. And I'm going to give y'all my take. I'm going to give y'all some pointers and what to do in a kind of a bearish market. Market has been falling for 3 months. I believe it's 3 months. We'll check that. It's been 3 months. Stock has not made any new highs. It's making lower lows. So we are in a stage 4 right now. Plug up my charger. So my thing won't go dead. All right. For those who haven't been in a bear market before, remain calm. Okay. It's gonna be all right. But remain calm. I'm gonna give y'all some pointers what to do in the situation. Some of y'all have been, kind of noticing what I've been talking about in the chat room. Very little activity right now, especially if you're not a shorter. But as we can see on my screen, let me zoom. Yeah, all right, I think that's good right there. As y'all can see on my screen, if y'all are looking, well, you can see the trend, the channel that I drew for the IWM. The Russell 2000 has broken this trend. It couldn't hold this rally right here. So for the past 2 weeks, we've been seeing nothing but red. There has been a lot of fake out plays in the sense of small cap, and a lot of y'all, including myself, has fallen for those fake outs. Um, with that being said, I'm also going to give my take. Like I said, I kind of had to draw back and look at my rules again, my personal rules that I have for myself. And I started to notice that I was getting back into bad habits of trading. We'll discuss those bad habits here in a second. But the IWM, it fell even more today. It looked like it was wanted to do something yesterday, but it kept falling today, mid-afternoon, and that's about 5 points, almost 6 points. The Dow has fallen 600 points. This is kind of similar to the 2008 year, but I'm going to change my time frame so y'all can see more of what I'm talking about. And I'm going to basically go by months. So we're going to do the max years and we're going to do by months. As y'all can see, this was 2008 year right here. This whole year, the stock market fell from the last high point all the way down to the last lowest point. It fell basically how many points? That was 7,300 points that whole year. So just want to give y'all a broad perspective of how that looks. That was just a crash in the digital world. We entered the digital world in 1999 with the stock market trading online. So can't go back to the Great Depression, 1929. But y'all can see in the digital area, the digital arena of stock trading in the stock market, this stock fell, as y'all can see, 7,219 points. And that was all within a year and some more days. Last time the stock market, dropped a big amount of points was right here. This was 2011. It fell 2,356 points in a year. We are now in the teens. Right here, it also fell in 2015. Also going into 2016, which I remember I was trading at that time. So going into 2016, it fell within a year. It fell 2,000 points. Right now, we're at the end of this year. So this year, we are basically, we're down 15, 20, 21. So we're down 1,500 points from where we started at the beginning of this year. So I want to give y'all a perspective of what's going on, why you shouldn't panic just yet. You have to do your analysis. That's just what it is. If you got to go back to max years, do that. But this is what's going on right now. So I don't want anybody to panic. If it keeps dropping, it just keeps dropping. We'll get to my take in there in a second. I'm going to keep saying that. But we're only down, like I said, 1,500, 1,600 points this year. Be cool. It looks bad, but it gets better. All right. And if it doesn't get better, we'll talk about what you do. All right. So this month alone, it's just been the worst month in years. And so it has a lot of people talking, a lot of propaganda. It's just a lot going on. And I don't want you or any one of us to get cluttered in that mess of listening to the news, listen to, this and that. I need you to look on your charts. I need y'all to look on your charts. Look at the charts. Forget the media. Forget what this trader has said. Forget what this stock analyst has said. Look at your charts. You have the skills and capability to look at it yourself to see what's going on. Now, we are not at a year low. All right. The year low is right here at 23,285 for the Dow. If we look at the S&P 500, we can see right here the low of the year for 2018 is 2,532. We're not at the low yet. Okay. So be cool. And even if it passes the low, just be cool. It's just this thing happens. It corrects. It has to correct. But this is not the biggest drop. You have this year of 2008. Even in the beginning of 2016, there was a drop. So just, hey, be cool. It happens. Just analyze the charts. That's what I need y'all to do is analyze the charts. Don't get bought into, this crash, that crash. Just analyze the charts and get that. If you see on the charts that this is a bigger crash than the other times that it has crashed or corrected, then you devise a plan. And I'm going to go over my plan. But that's what's going on. The tech, even the NASDAQ doesn't have many falls, but right now, I think it's one of the biggest in 1 month. Even in the years of 2000, when the internet bubble crashed. Now, all the other ones are a little different than this chart because the NASDAQ is mostly tech companies. So right now, what's really holding up this this index right now is Apple. If Apple can hold that October, then we have a good chance. And we'll look at Apple. But NASDAQ is tech companies. So this was a bubble that popped with the tech companies, but it just corrected. It had to correct. During this time, of course, there wasn't a lot of buying, but eventually it gets back to the trading range that it's supposed to be in. Right now, of course, you see the same thing happen right here. It looks similar. All right, you have a big run up. You have a big drop that happens afterwards. That happens. So, like I said, we'll talk about what we should do at that time. And that's pretty much all of them. The one that directly affects us, it's dropping right now. And the last time it dropped this big was 2008. And that's when the mortgage industry crashed. And we know how that went. That lasted all the way into 2009. So it lasted almost a year. So during this time, like I said, there wasn't a lot of trading. Right now, there's not a lot of buying going on. So we just have to take precaution. Now, I'm gonna jump into that. I'm gonna jump into, what you do in a bear market. I'm just gonna jump into that. And I haven't experienced a 2008. I think I was in, I think I was in, was it freshman or sophomore? I remember at that time, my dad almost lost $1 million. He didn't lose it in the stock market. He actually lost it in the mortgage industry. He then resulted to the stock market in 2009. And, that's his experience. And He provoked me to learn. If you know my story, my dad provoked me to learn. He didn't teach me. He told me to go out and learn. So that's what I wanted to do. So with that being said, just because it's falling right now doesn't mean that there is no other opportunities. Um, After a correction, it does go back up. All right, understand that. But the thing that I experienced was the 2016, beginning of 2016. There was a bearish movement, and I'll zoom in on that for a second. So that December, which was my first trade, December of 2015. My first trading year was 2016. So I got a chance to experience this right here, and this was it's a relative big drop. Uh, Not as large as the other ones, but it was pretty big. People thought it was just crash mode. People were predicting a crash right then and there, but as you see, after 2 months, even after the second month, it started going back up at the end of the second month, and it rallied all year from there. That was my big year, so that's my six-figure year. I've experienced this, and this wasn't good for me. I had a lot of losses. I had some wins in there too, but I had a lot of losses these 2 months. Remember, 4 to 5 months for me. So 1, 2, 3, 4, 5. So when I start seeing consistent wins, but you see what happened during those wins, the market was rallying up. I was forcing trades. I didn't know what I was doing at the time, but I was forcing trades during this time because I was a newbie and I was trying to experience the market. I had money ready. I was ready to go. It was at a point where I had to draw back, and what I mean by draw back, I was using real money and I had to draw back and not use real money and paper trade because I thought I didn't know what I was doing. In reality, I knew I had knowledge and I had skill, but I was trading during a bearish movement. And that's what a lot of us have been doing lately, getting into that habit of trading, trying to force trades. You know, it was just it just wasn't the best time to trade, and you got to find that bullish movement. So it wasn't until March where it was started being bullish. A clear bullish rally, and I was still, trading at that time. I drew back, so got back on the simulator, and it wasn't until April where I started seeing some consistent gains. So that being said, this is a bearish movement. So, if you want to get back on your simulator, that's cool. Just to test some things out in a bearish market, see what works, see what doesn't work. But I wouldn't be too fond of, trying to force trades. And let's go ahead and jump into my take on things. And I'm gonna move my screen so y'all can see right here. All right, this is my take. Okay, if you are going to, continue to trade, I would say stick to the rules. We have 5 fundamental rules that we go by, and they are posted in our main chat. They're pinned at the top, so you can see the 5 fundamental rules. Now, outside of this, you may have different rules. Cool. But I think these 5 rules will keep you in the game. All right. This is usually when people blow up their accounts, forcing trades. If you're a newbie, please don't force any trades. If you have some experience and you're an intermediate trader, please don't force any trades. Stick to these rules. These rules work. Don't blow up your account. Always set stops. Don't chase. Wait for the setups to happen. Control fear and greed. Okay? Right now, greed is going to be your best friend in your ear trying to get you to do something stupid, because it does that. You want to make money. You want to do this. You've been making money the rest of the year, all year. Now you're not making that much money. I want to make more. I want to make more. I want to make more. Greed will be that friend, that bad friend that's not good for you. Okay? So control that the best way you can. I would say control greed. Sometimes just during the market hours, I mean, set your alerts, but don't open up your platform. Let your alerts play out. If your alerts don't play, if your alert sets off, then open up your platform and see what that stock is doing. Because you'll get in the habit of running through your scanners and like this looks like a good trade. It's green, it has a little spike, and really it's just in stage 4 and it has that dipping point. All stages have dipping points, and you don't want to get caught in that. Make sure it's in an uptrend. But the second thing, don't force any trades if you don't see them. Point blank, your idea setup. If it's not there, then close your laptop and chill. And I literally mean that. Close your laptop. Go over here, go to your startup, go to the power button, and click shut down, sleep, whatever. Close it. Go on about your business. Pretty sure you got other things to do. But don't force anything. Your idea set up. I know my idea set up. It's actually a picture in the album. I can see it. Even if it's in an uptrend, I'm not finna like force any trades. I want my idea set up at this point. And I say if it's anything outside of that, you have your main core strategy. Don't try new things. This is not the time to try new things. It's just in a bearish movement. The next thing. Now, if you do find your idea set up and you do find something that's been working for you and you do play it, beware. And this is what I do. If I do find my idea set up and I find, a non-cyclical stock, then I'm going to take my 10%. I'm going to take the bare minimum, because usually the stocks do not last long in a rally in a bearish market. They just don't. It doesn't shoot up 40, 50, 100%. There are still plays. There are day trades still available, because I know some of y'all do day trades. But take that small percent and get out. Don't expect the stock to just run up super crazy. And if it do, take your 10%. Be happy with that. I would say reduce your share size as well in this market. You don't want to get caught up in the stock and it's a huge sell-off. And at this time, like, your stock can get bust through. It can bleed. So reduce your share size, because if you're selling back, there's not a lot of people buying. So if you're trying to sell back and you got a lot of shares, or you think somebody's going to buy a lot of shares during this type of market, no. So I want you to be smart about that. Reduce your share size. Take your 10%. Be done. Now, this is the last, but my favorite. The best position is no position. So what that means is you just hands on cash, man. Like, you out, you don't have no share, you don't have no positions. That is the best position. Just watching, studying. Don't make yourself feel like you're being left out. Like I said, you're gonna see other traders make plays. You probably see me make a play or something, and I may win, and you may be like, there's plays out there. I'm gonna try to force a trade, or I'm just gonna try to get in the trade, but you're really forcing it. Don't make yourself feel like you're being left out. Be cool. The best position right now is no position. You'll see other profits. Like I said, just remain solid. Just don't force any trades at this moment. And that's just my take on a bearish market. Like I said, there's not a lot of plays. The only play I seen today was AKER. And looking at this overall, I don't think this is the perfect setup, but 10% out of this, yeah, it's possible. Even in the bearish market, this stock stays strong. It is a nano cap. Like I said, I didn't see too many plays today. Even this one. This is something I traded back in August, and it rallied up. But I mean, it's doing the same thing. It had a double bottom pattern, but like I said, this thing rallied. It didn't last that long. It shot back down, and just not in this market. I just don't expect too many rallies. And if they are big, cool, probably a nano cap stock. But if you look through the scanners, And you look at the small cap scanner, not a lot of plays. Out of all the small cap stocks, not a lot of plays. That's trading in the millions or above 500,000, not a lot of plays. You see some green, but look at the percentages. You know, didn't really go up that much. Some of them are still red. So, like I said, be careful. It's not a lot of sit-ups. The nano cap, you know, there's things moving, but not a lot of uptrends. A lot of downtrends, and stocks are, dipping. Not a lot of uptrends. As you can see, like this thing wanted to uptrend and it just failed. So it's not a lot of movement going on. This is the only thing that I see that's trying to be an uptrend. It is in the stage two, but just AKER is just it's not a lot of going. It's not a lot going on. So when you don't see plays, don't train your eye to just give yourself a mirage or something. You just like, yeah, this is gonna be good. I think this is gonna be a game changer. No, there's not a lot of stuff. It's just not. So it's okay to just chill on it. Perfect time to. This is the perfect time to watch video lessons. Watch the video lessons. Go back in the course login. Watch the video lessons over and over. Take notes. Take a lot of notes. Review your trades. All the trades you've been making, go back and review them. Look at all your winners. Look at all your losses. Make rules from your losses. Also, go back to your winners. See what works. See what your idea setup is. See what you win on the most. Paint a picture. See how it looks. Create a watch list with all your winners. Create a watch list with all the winners that looked just exactly alike. Study the variables. What was the volume? Where was it? Where was it trading at? What was the price range? Look at all the variables that match. Study yourself. This is the perfect time for that. Yeah, it's just the perfect time for that. It's not a lot of movement, not a lot of stuff going on. I'm just gonna be chilling, sitting back, until I'm gonna continue to teach. I'm gonna continue to go over the things that are essential to your growth, to your stock growth. But right now, it's just not a lot of plays. And if I do see something, I will let y'all know. I will give y'all my alerts still. There's not going to be a lot. I don't know if, I have alerts that are still active and not a lot has been triggered. Only thing today was AKER. So I have stuff that hasn't been triggered, and I'm not surprised if it never gets triggered right now. With the IWM, just getting back on that, we have a low point right here. That was a low. I think that is the year low. So this is the year low. If it busts through that, then of course you'll know that this year ended off bearish. Well, it is bearish right now, but you'll know like it's really making new lows. So just watching this thing every day, seeing what it does, paying attention to the news and seeing what's being said and what's causing. A lot of this has a lot to do with politics, has a lot to do with the tariffs, and it has a lot to do with, just a lot of world events. That's why the stock market is considered unpredictable, because anything can happen at any second, any time. So right now I'm paying attention to Twitter. Just paying attention to the national and world news and seeing, what's going on around different countries, different laws. A lot of stuff is going on. You have the Senate race. You have a lot of offices, getting ready to be filled. So I'm just paying attention, just watching, and I would recommend y'all do that. If you do start forcing trades, you can blow up your account. You can literally blow up your account. I've seen some millionaire traders not blow up their account, but dang near lost all they profits they've ever made. Losing 100,000 in one day and 20,000, 50,000. So just learn from those mistakes, and that's why I'm not heavily trading right now. Just not. I'll take that 200, 300% if I see my idea set up, but not taking too much. It's not a lot going on, and that's pretty much it. Uh, Now, I'm not going to do the mastermind today, but I am accepting Q&As at this moment. So if you got questions, feel free to shoot it in the chat. Yeah, shoot it in the chat. Um, and I'm open to answer some of your questions that you might have. I've pretty much been answering questions all week. What to do, stuff like that. Gotta don't listen to listen to your charts. And I know that sounds weird, but listen to your charts. Listen with your eyes. Now your parents say listen with your eyes, your coach or whatever. Listen with your eyes. Look at the chart, see what it's doing, pay attention to what's going on, and adapt, adjust. The great traders adjust. Let's see. Ask questions. Like I said, y'all ask questions. Uh, when do I think the market's going to turn around? Well, my opinion, it'll have to be around a area of support, and I'm gonna answer this the best way I can. It has to be around an area of support, and that's what I'm looking at. If it keeps dropping, it has to be around an area of support where people want to buy, and nobody's wanting to sell anymore because everybody's selling from all these companies. A lot of big drops when hedge funds, when they move their money and when they sell their shares out of a company to protect their clients, that's when you see these big drops. That's what's happening right now because they have the big money and we're just small time players. So whenever they're done selling and, they want to start buying back with their big money and, you have retail traders buying back, then that's when you will see a bounce off support. When that happens, I would want to see it clear a resistance from that point. So if it bounced right here, let's just say it dropped all the way down to 142.37, and then it started consolidating and started to rally, I would want to see it clear some resistance points. And I'm talking about clear with no problem, no struggle. Then I can say, okay, now we're back in the rally. And I'm not talking about no shoot straight up. No, I wanted to see gradually go up. And then I say, okay, we're in a clear rally. That's my viewpoint. I can't give you an exact price. I'm not trying to be the predicting type of dude. I'm going to play off reaction. And once it starts to bounce off some of these supports, and it starts to rally gradually over time, then yeah, then I'll start playing. But right now, I'm not trying to predict. I'm trying to play off reaction. When it does that, you put yourself in a better position. Are nanos safe at this point? Nanos are never safe. Bullish or bearish market, nanos are never safe. Hell, small caps are not safe. Nothing's safe in the stock market, but nanos are nanos for a reason. They are never safe in a bullish market. They're so volatile and so crazy. Like, no, they're even more dangerous at this point. And you'll see nanos rally up super big. But you have to catch those, and it has to be your ideal setup. Like I said, I've been looking through the nano cap scanner, and there's not a lot of stuff in the uptrend. This is just a downtrend, and then you see some big spikes, and then they'll just fall right back the next day. And that reminds me of the beginning of 2016. That year is just no. So nanos are never safe. Let's get that straight. And then during this market, I mean, they're just really not safe. Now, if you see a big rally, like this market is making me want to learn how to short. Like I know the basics, but I don't have a strategy for shorting. So like these points, these moments, like tomorrow, watch this stock tomorrow. Like the stock gapped up, ran up, but look what happened during the day. It just went right back down. So rallies don't last long. And that's my viewpoint on nanos. Like, same thing. Nanos are never safe from the jump, but uh, just not a lot of strong plays out there. If you're bullish, you have a lot of people still shorting. A lot of my Twitter friends, Twitter community, a lot of shorters in that community. I don't know why I'm friends with a lot of shorters. I really don't. On Twitter, I don't know why I don't know how that happened, but a lot of them are making money. They day trade, they short stocks, they swing trade short, all that good stuff. Right now, they're having a ball because stocks will spike up and they'll just short it. And a day or two later, it falls right back down because we're in a huge sell off right now. So they'll bank on that. One thing I do know about shorting, and this is not, you can research yourself, is that you do have to get a position early when it spikes, and then you will be negative, for a minute before it falls. So you want to try to catch shares to short. You got to borrow from your broker, so your broker has to have shares in that company, or clients with shares in that company, and then they'll lend it out to you, and you buy back once it falls. So I do know that. But like I said, I'm not an expert on shorting. If that's what you want to do, that's something you might want to learn. I'm thinking about, getting with some of maybe I can do a collab video with some of the Twitter community. Do with one of the shorters that I do know, and he can probably do a video lesson or something. I just have to reach out. But right now, yeah, TD Ameritrade is not good for short, is what I've heard. Not good for short. E-Trade. I have an E-Trade account too. So you might want to get an E-Trade account. E-Trade, they say it's the best for shorting as of now. So not sure what's going on in other markets. I know right now the real estate is booming. It is a seller's, it's not a buyer's market. So the prices are real high in real estate. So those who have real estate, congratulations to that. My friends are banking right now from real estate deals. But I'm waiting for it to be a buyer's market in real estate, and that's just in another industry. Right now, that's why I do want to say this. It's always great to have different streams of income, no matter what it is, because things go through seasons. Every income, every industry goes through a winter. And right now, we're technically going into winter, but I'm talking about when an industry is doing bad or good. And when it's doing bad, we call that a winter time. So right now, the stock market is having a winter time, and now is a good time to develop different streams of income, or continue to exercise your different streams of income. And when you have that different stream of income, even when like one stream is doing bad that season, that industry, you have other ones that's lifting you up. And I know most of us, have, day jobs and corporate stuff and contracts and different endeavors. That's why it's good to have different streams, because if you're dependent on this to pay your bills, and you push all your eggs in this one basket, right now you're probably biting your fucking nails, because it's hard right now. Even for day traders, it's really choppy. It's not a lot of. It just spikes drop. You really got to catch them. You got to be early. So, got to be cool. Gotta plan for anything to happen, and don't wait on the karma to come. It happens all the time. So have different streams set up. Right now is just a chill moment for bullish traders. If you want to be bearish, you want to do both. That's cool. Learn that. I'll reach out and put that on my to-do list. I'm gonna reach out to some traders that I know how to short. Probably do a collab video on YouTube or something, post it, and y'all can get some intake from them. I'll just probably be asking questions for y'all. So if you do have questions about shorting, give them to me. I do know one trader who will probably be willing to do a collab video and share some knowledge. But y'all can YouTube different shorters out there. So many shorters out there. Y'all can YouTube on how to short. What's the best shorting strategy. Do that. because you'll figure it out. You'll figure it out that there is a way to make money for stocks going down, and they are balling right now. So shoot me some more questions. These questions are really good. I really like these questions. Seems like I have more questions when the market's doing bad than when it's doing good. But um, let's see what we got. If you want to look at, I guess the IWM. Just to answer your question, Corey, the IWM um, is the price is way different than all the other indexes. The price is way different. So you got to look at it from a percentage standpoint. So looking at the percentage standpoint, right now the Nasdaq is taking the biggest hit, and that's probably if you watch CNBC, they're talking about Apple having to, kind of hold up that index, the whole market really, because Apple is a 500 fortune company. So if you're looking at it, the percent change, Nasdaq is taking the biggest hit right now. Then next in line will be small cap, and then next in line will be the S&P 500, and then the Dow. All these are different price ranges, so you gotta pay attention to that. But pay attention to the percent change. And if I was to sort this out, you will see what is on the top, and you have basically the Nasdaq on top, and then the IWM. So yeah, it is up there. So out of the three, excluding the Nasdaq, then yeah, the Nasdaq is just mainly for the New York Stock Exchange and then the tech companies. So yeah, you could say that, but we have Nasdaq up here is taking the biggest hit, and then the IWM is taking the big hit too. They're all taking the big hit, honestly. Just it's not a lot. It's just not a lot going on. A lot of sell-offs. This has a lot to do with world events, different policies, stuff like that. Hedge fund managers are protecting their clients' accounts. So right now, you might can buy some bonds or preferred stocks. Those are some good things to get into to learn about. I know I don't teach that stuff. I stick to the main thing. But preferred stocks, options. I'm about to learn options, learn how to do options, learn how to trade. Option traders right now are making money because they're selling insurance to other investors. Because the stock market's falling, so they need insurance on the stocks and shares and their money. So options are good. There's so many other endeavors. So browse around. So yeah, to be straight to the point, yes, the small cap is taking the biggest hit outside of the Nasdaq. With the Nasdaq included in all the overall markets, you can see clearly with proof that the Nasdaq is taking the biggest hit. It is down 329 points today. The IWM is down almost 6 points today. S&P 84 points, and then the Dow 608 points. I mean, and then if you look at it, at the beginning of this year, the same thing happened. So if we look at our technical analysis, boom, we see the low right here. We see this happening. We see that at the beginning of this year. We see what happened right here. Big drop, big drop. It may go back up sometime. I'm just not too positive, not too sure. I'm not trying to predict anything. I'm just looking at the supports, the different support areas, seeing where it hasn't hit yet. If it can bounce, it can bounce. If it will, it will. Just waiting, just watching. Any more questions? And nothing's a done question, by the way. Y'all have never experienced a correction, so pretty sure y'all have some thoughts about different things. Probably feel like, oh, I don't want to trade anymore. Probably took some L's. Stick with it. It gets better. I can just tell you from experience. That's it. That's all I can go off of. All right. I'm cool with that, Corey. I'm gonna let it ride out too. I'll keep you guys updated on everything. Everything's breezy right now. It's cool. All my other streams are picking up. Stock market stream is not picking up. So I'm gonna sit on cash. I may liquidate some of my accounts um, and take some money out. I usually like to keep my money in the stock market, but if something does seriously happen, I would say liquidate your accounts. With cash. Buy some assets with that cash. If you don't really have the cash, then just sit on cash. If you don't have the cash to buy assets, by the way, um, stock up on things, natural resources and stuff like that, or land. Land is really good. I will say that. It's life survival type stuff. For real. Research 1929. Research the Great Depression. Um, it's not always during this time. It's not always good to leave your money in the banks. So sometimes you just have to take out real hard cash. I know everything is digital, but last time this happened in 2008, some people accounts were frozen, and it just got really bad. So take some cash, have some cash on hand. That's all I'm saying. Have some cash on hand and go back old school for a second. And that's just friend to friend right there. That's not coach. I guess that is coach too, because stock market stuff, man. So do research. Don't believe what everything says. Do research. All right. If there's no more questions, I'm gonna go ahead and end it off. 45 minutes. I think that's pretty cool. That's it. Got questions? Shoot them my way. Be cool. Don't force trades. Wait for the setups happen. Watch the overall markets. Listen to the news. Twitter is a good source. That's pretty much all I have for you guys. If you are interested in other streams of income, shoot me a message. I may bounce some ideas off you and see, if you're interested in certain things. I got a lot of friends, a lot of network. So let me know. It is not over. It is not the end of the world. Just keep studying up. Let this bypass. If it keeps shooting down, then take measures. I gave y'all my take. Go back and watch this video, and that's pretty much all I got for you guys. Love y'all. Peace. See y'all later.